Deep in the heart of the Borneo jungle, a modern El Dorado was allegedly unearthed, promising wealth so vast it threatened to destabilize global bullion markets. By the mid-1990s, a tiny, obscure exploration company claimed to be sitting on over 70 million ounces of gold, a reserve worth tens of billions of dollars. Yet beneath the dense canopy and the feverish market speculation, this monumental discovery was nothing more than an elaborate mirage. It stands as one of the most audacious financial deceptions in modern history, a masterclass in exploiting human greed and systemic blind spots. The saga of this phantom mine forces a critical examination of how easily the world's most sophisticated financial institutions can be duped by a handful of dust. The genesis of this unprecedented illusion took root in the speculative frontier of the Alberta Stock Exchange, a market notorious at the time for high-risk resource ventures. In 1993, Bre-X Minerals was a struggling penny stock, trading for mere cents and teetering on the edge of insolvency. Founded by David Walsh, an ambitious but struggling promoter, the company desperately needed a compelling narrative to attract capital. The global mining industry was fiercely competitive, and without a viable physical asset, Walsh's enterprise was doomed to remain a footnote in financial obscurity. Survival required a geological miracle, or at least the convincing appearance of one. That miracle arrived in the form of Michael de Guzman, a charismatic and highly persuasive Filipino geologist with a reputation for understanding the complex geology of the Pacific Rim. De Guzman possessed an uncanny ability to weave complex geological data into a captivating narrative of undiscovered wealth. He convinced Walsh to purchase exploration rights in Busang, Indonesia, a remote region previously explored and abandoned by other mining conglomerates who had found nothing of commercial value. De Guzman, however, insisted those early explorers simply misunderstood the subterranean architecture. His supreme confidence in scientific vocabulary provided the perfect veneer of legitimacy for the deception that was about to unfold. To understand the mechanics of this fraud, one must first understand the fundamental process of mineral exploration through core sampling. Geologists drill deep into the earth, extracting cylindrical columns of rock, which are then crushed, pulverized, and chemically analyzed at independent assay laboratories to determine their mineral content. These core samples act as the foundational truth for any mining operation, the physical evidence upon which billions of dollars of investment are justified. If the rock contains high concentrations of gold, the company's valuation skyrockets. The integrity of the entire global mining sector relies completely on the uncompromised custody of these cylindrical rock columns from the drill site to the laboratory. This chain of custody, however, contained a fatal flaw, rooted in a culture of implicit trust among scientific professionals. In the remote jungle camps of Busang, oversight was virtually non-existent, creating an environment ripe for manipulation. The independent auditors and financial analysts situated in air-conditioned offices in Toronto and New York relied blindly on the data fed to them from the Indonesian wilderness. They operated under the assumption that a credentialed geologist would not risk their professional reputation to falsify physical evidence. This systemic vulnerability, the naive belief that scientists are immune to the temptations of immense financial fraud, became the fertile ground in which the deception flourished. Exploiting this blind spot, de Guzman and his inner circle initiated a practice known in the mining industry as salting. This illicit technique involves artificially adding valuable minerals to barren rock samples before they reach the assay lab, completely corrupting the data. Initially, they used gold dust panned from local rivers, carefully sprinkling it into the crushed core samples. It was a meticulous, manual process, requiring precision to ensure the added gold matched the geological profile of the surrounding rock. By secretly contaminating the bags of crushed rock, they guaranteed that the independent laboratories would report astonishingly high gold grades, transforming worthless dirt into a seemingly limitless treasure trove. As the manipulated assay results were published, the financial markets reacted with unbridled euphoria. Bre-X Minerals transformed overnight from a worthless penny stock into a multi-billion-dollar behemoth, its share price surging from pennies to nearly $300. Institutional investors, mutual funds, and major banks scrambled to acquire a piece of the Busang action, terrified of missing out on the discovery of the century. The company's market capitalization soared past $6 billion, making millionaires out of early backers and elevating Walsh and de Guzman to the status of industry legends. The sheer velocity of this wealth creation effectively silenced any lingering skepticism within the financial community. Caught in the gravitational pull of this manufactured gold rush were thousands of retail investors who poured their life savings into the dream of Busang, ordinary people captivated by front-page headlines and the enthusiastic endorsements of trusted financial advisors mortgaged their homes and drained their retirement accounts. They believed they were participating in a historic economic boom, completely unaware that their financial futures were anchored to a fabricated narrative. The psychological manipulation was profound. The illusion of collective prosperity blinded these individuals to the inherent risks of wildly speculative resource stocks. Despite the skyrocketing valuation, subtle anomalies in the geological data began to emerge, presenting a puzzle for independent experts. A few skeptical metallurgists noticed that the gold particles found in the Busang samples had rounded edges, a characteristic typical of river-panned gold, rather than the jagged edges expected from gold trapped deep within volcanic rock. Furthermore, the sheer consistency of the high-grade results defied statistical probability for a deposit of that nature. Yet, whenever these red flags were raised, the company's leadership dismissed them with complex pseudo-scientific explanations, aggressively threatening legal action against anyone who dared to question their findings. The defense of the illusion was heavily fortified by the very financial analysts whose job was to protect investors, driven by the lucrative investment banking fees generated by Bre-X. Many Wall Street and Bay Street analysts abandoned their objective due diligence, transforming into aggressive cheerleaders for the stock. They issued glowing reports, constantly revising their estimates of the gold reserve upwards from 30 million ounces to 50 million, and eventually to an absurd 200 million ounces. This capitulation of independent analysis highlights a devastating conflict of interest within the financial sector, where the pursuit of short-term profit overrides the fundamental duty to verify the truth. As the claimed size of the deposit grew to impossible proportions, the mechanics of the salting operation had to evolve to keep pace with the lie. The local rivers could no longer supply enough gold dust to salt the massive volume of core samples required to justify the 200 million ounce claim. Investigators later determined that the conspirators began purchasing massive quantities of locally manufactured gold jewelry, melting it down and shaving it into the sample bag. This industrial-scale contamination required a staggering level of logistical coordination and brazen confidence, turning a remote jungle camp into a highly efficient factory of fraud. The magnitude of the supposed discovery eventually triggered geopolitical shockwaves, drawing the attention of the Indonesian government. Recognizing the strategic and economic value of the Busang deposit, the regime under President Suharto moved to assert control over the asset. They mandated that Bre-X could not develop the mine alone and forced the company into a joint venture with a powerful, established operator. This political intervention, intended to secure national wealth, inadvertently set the stage for the collapse of the entire scheme by introducing a skeptical, highly experienced third party into the equation. The entity chosen to partner with Bre-X was Freeport-McMoRan, a giant in the global mining industry with a reputation for rigorous operational standards. Freeport agreed to invest heavily in the project, but their involvement came with a non-negotiable condition. They would conduct their own independent due diligence drilling before finalizing the partnership. This demand represented a catastrophic threat to the deception. For the first time, a team of outside experts, completely outside the control of de Guzman and Walsh, would extract their own rock from the ground and maintain strict custody of the samples all the way to the laboratory. The impending arrival of the Freeport-McMoRan auditors plunged Michael de Guzman into a state of desperate panic. The meticulously constructed facade he had maintained for years was about to be subjected to an uncompromising scientific audit that he could not manipulate. Associates noted his increasingly erratic behavior and deteriorating physical condition as the pressure of the impending revelation mounted. The psychological toll of sustaining a multi-billion-dollar lie, knowing that exposure would lead to absolute ruin and likely imprisonment, created an unbearable, suffocating reality for the chief architect of the hoax. The climax of this psychological unraveling occurred in March of 1997, under circumstances that remain shrouded in controversy and dark speculation. While en route to the Busang site to meet with the Freeport due diligence team, de Guzman allegedly jumped from a helicopter flying at 250 feet above the dense Indonesian jungle. His body was discovered days later, severely decomposed and largely unidentifiable, leading officials to rule the death as suicide. However, the convenient timing of his demise just days before the fraud was exposed birthed enduring conspiracy theories that he faked his own death to escape justice and enjoy his illicitly gained millions. Unfazed by the tragedy and the swirling rumors, the Freeport-McMoRan team proceeded with their independent verification process. They positioned their massive drill rigs mere feet away from the original Bre-X holes, extracting parallel core columns to compare against the historical data. They implemented draconian security measures, guarding the drill cores with armed personnel and ensuring an unbroken, heavily monitored chain of custody to their own trusted assay laboratories. The objective was simple: to scientifically validate the presence of the greatest gold deposit in human history, isolating the process from any outside influence. The results from the Freeport drilling were absolute and devastating. The independent assay laboratories reported that the parallel core samples contained only microscopic, non-commercial trace amounts of gold. The 70 million ounces, the 200 million ounces, the endless wealth promised to the world. None of it existed. The Busang site was nothing more than barren rock. The announcement struck the financial world with the force of a seismic event, shattering the illusion instantly and exposing the entire enterprise as a colossal, meticulously engineered fabrication. The market reaction was instantaneous and apocalyptic. When trading of Bre-X stock resumed, the share price collapsed from its lofty heights to mere pennies in a matter of hours, evaporating over $3 billion of market capitalization in a single trading session. The trading floors in Toronto and New York descended into chaos as desperate investors tried to liquidate their worthless holdings. The company that had dominated financial headlines as the success story of the decade was instantly reduced to the most notorious cautionary tale in modern market history. The human toll of the collapse was staggering and immediate. The retail investors who had mortgaged their futures on the promise of Busang were financially annihilated. Retirements were destroyed, life savings vanished, and countless families faced sudden, catastrophic bankruptcy. The emotional devastation was compounded by the realization that they had not simply made a bad investment, but had been the victims of a deliberate predatory deception, facilitated by the very financial institutions they trusted to protect them. The betrayal ran deep, leaving scars that would last a lifetime. In the aftermath of the crash, forensic accountants and regulatory investigators sifted through the wreckage, uncovering a deeply disturbing reality about global financial markets. The fraud succeeded not because the perpetrators were infallible geniuses, but because the systemic safeguards designed to prevent such deception had completely failed. Auditors had accepted unverified data. Regulators had ignored glaring anomalies, and analysts had prioritized commissions over due diligence. The entire ecosystem had been compromised by a collective suspension of disbelief, driven by the intoxicating allure of unprecedented wealth. The catastrophic failure forced a radical overhaul of regulatory frameworks within the global mining industry. In Canada, securities administrators implemented National Instrument 43-101, a stringent set of rules governing how mineral projects must disclose scientific and technical information. This regulation mandated that all geological data must be verified by a qualified person, an independent expert who assumes legal liability for the accuracy of the reports. Furthermore, it enforced strict protocols for the chain of custody of core samples, ensuring that the physical evidence of a discovery could no longer be easily manipulated in the shadows. Yet, while regulations can mandate technical compliance, they cannot eradicate the underlying human psychology that makes such frauds possible. The fundamental vulnerability exploited in the Busang hoax was the powerful desire to believe in a miracle, the willingness to suspend critical thinking when presented with the promise of effortless riches. Fraudsters understand that when a narrative aligns perfectly with the deepest desires of their target audience, skepticism is often the first casualty. This psychological manipulation remains the most potent weapon in the arsenal of any financial predator. Today, the ghosts of this historic deception continue to haunt the modern financial landscape, manifesting in new, technologically advanced forms. While perpetrators may no longer salt physical rock with shaved jewelry, they routinely salt digital ledgers and corporate balance sheets with fabricated data, the vaporware of the early internet era. The phantom assets of fraudulent cryptocurrency exchanges and the wildly exaggerated claims of certain tech startups all share the same genetic code as the Busang hoax. They rely on complex, poorly understood technology to obscure the truth and project an illusion of massive, untapped value. The modern equivalent of the corrupted core sample is the manipulated algorithm or the falsified user metric. Just as the perpetrators in the jungle used scientific jargon to intimidate skeptics, today's fraudsters use the impenetrable language of blockchain, artificial intelligence, and proprietary software to deflect scrutiny. They create a digital mirage, presenting stakeholders with dashboards and spreadsheets that show exponential growth and guaranteed returns, all while the underlying enterprise is completely devoid of actual substance. The mechanism of deception has digitized, but the objective remains identical. Consequently, the burden of verification has become exponentially more complex for modern investigators and investors alike. Penetrating the facade of a digital fraud requires not only financial acumen, but also deep technical expertise to audit code, trace encrypted transactions, and verify digital identities. The speed at which information travels and capital flows in the modern era means that a sophisticated deception can scale to a multi-billion-dollar valuation in a fraction of the time it took the perpetrators in the 1990s. The window for intervention is narrower, and the potential for catastrophic loss is greater. The legacy of the Bre-X hoax serves as a permanent, glaring monument to the dangers of unchecked speculative fervor. It stands as a historical anchor, reminding us that no matter how sophisticated our markets become, they remain fundamentally human institutions, susceptible to greed, manipulation, and the intoxicating power of a well-crafted lie. The barren rocks of Busang are a testament to the fact that extraordinary claims require extraordinary proof, and that blind trust in the financial sector is a dangerous, often ruinous vulnerability. Ultimately, defending against the next monumental deception requires cultivating a mindset of relentless informed skepticism. Investors must demand transparency, insist on Recognizing the patterns of historical frauds is the first line of defense against the sophisticated scams of tomorrow. By understanding how illusions are constructed, we strip them of their power. News Stories Weekly. Stay one step ahead of the fraud. Subscribe.